everyone. So before we kick off the webinar, I wanted to quickly set the stage just so we all have some context. Firstly, my name is Peter. I'm a senior associate here at 500. And so my job is largely to work with a number of corporate investors and innovators on projects related to startup investment and startup partnerships. And so this event is being hosted as a part of our ongoing Slack community called 500 VC. 500 VC is an invite-only Slack community for corporate institutional investors to engage in helpful conversation, networking, and ultimately empower founders. And so as a part of this, we host networking events, startup presentations, and discussion series like this one. Within the Slack group, we started the Corporate Venturing channel to be a collaborative community through which members can share best practices and learnings, as well as help enhance the perception of CVC among the startup ecosystem. And so if you're at all interested in joining a community like this, please feel free to drop me an email. I'm going to put my email and Sean's email in the chat in a couple of seconds. Please feel free to email us and reach out, and we'll go ahead and get you set up. And then for this event in particular, this is a bi-weekly speaker series featuring top corporate venturing practitioners sharing their unique journey to CVC, their specific challenges, and the best practices that they've developed along the way. And so Q&A will be on throughout the webinar. So if you have any questions that pop up, please feel free to drop them in the chat or in the Q&A, and Nicolas will try to get to them towards the end when we do the Q&A portion. So now that you know what's going on, I'm going to go ahead and pass it over to Nicolas to kick things off. Enjoy.
Thank you, Peter. Thank you, 500 Startup, for making this happen. This is really useful for everyone in corporate venturing, also thinking about joining corporate venturing. Today is very special. I'm very happy to have Jaclyn Kossmann, Senior Investment Manager at Applied Ventures, to join us and to be able to share with us what she has learned, what was her career path, best practices, and maybe mistakes to avoid. For disclosure, we have already co-invested in one company with Applied Ventures, a company called Echo, and another one which we are closing in September, but we can't say more than that. Jackie, all yours.
Awesome, thanks, Nicolas. And to add, hopefully many more co-investments as well. I've got a few deals I'm happy to send over. So to introduce myself, so Senior Investment Manager at Applied Ventures. I've been there now over 3 years. Nicolas, sorry, do you want me to start going through some of the questions, or just talk high level on kind of my background at Applied Ventures to start with, or?
So maybe in the first 5-10 minutes, it's about who are you, which is what was your career path? Did you plan to go into corporate VCs? What do you know, and what should the community come to you for?
Okay, got it, yeah. So yeah, my career path, pretty circuitous, I'd say, which is, you know, somewhat how I like to operate, kind of similar to a startup. You have a plan, and sometimes you kind of, you know, pivot and come back, or sometimes you find a new direction or, you know, new opportunities. So worked actually for many years in renewable energy at several startups in that world. So was very excited about clean tech and those innovations and how it was really going to impact you know, society, and also just really interesting technology. And then, you know, so worked for kind of venture and PE-backed startups, and then went to business school, kind of poking around, exploring, you know, what else I was interested in, and had a mentor in business school who was very, you know, really a great coach, and encouraged me to look closely at venture. You know, he felt like I had an entrepreneurial leaning and knew I was very interested in, you know, being on the investment side of things. So he and I actually co-founded a fund in business school. So it was a student-run fund, and that was my first foray into venture, and I was definitely hooked. Definitely a really fun experience. You know, building out the team, building out the, you know, investment model. And so from there, that's, you know, how I got into venture. So, you know, you know, as I said, I didn't completely plan it perfectly, but, you know, now that I'm a VC and have been, you know, I did a little bit of angel investing, kind of, you know, friends and family style investing earlier on, but, you know, officially a VC for 5 years now. And, you know, I really can't imagine doing anything else. I really love that you get paid to be curious. You get paid to learn. You get to meet the most amazing, passionate, energetic, outgoing, entrepreneurs that just kind of have blinders on. Don't want to break through walls. And I think I'm just definitely a founder fan. So love that aspect of venture. I also really love, I think this sometimes surprises people, but I'm a little bit of a sci-fi nerd. I read a lot of sci-fi. In fact, my family and I, as I mentioned before, I'm home with family for a few weeks. We were watching Star Trek Next Generation the other day, and I was like, man, I remember this being way more high tech when you watch it. Picard is still great, but anyway, so really grew up in that world and love just thinking about what's the future going to be like, how are our lives going to be changed by technology? So that's what I really love about venture, whether you're pushing the envelope on a business model or a technology, or you've come up with something just completely out of left field, and can you commercialize it? Will the market adopt it? I think that's really what excites me, especially at Applied Ventures. So to talk a little bit about Applied Ventures, the corporate venture arm at Applied Materials has been around for over a decade. And Applied Materials, for those who don't know, is one of the largest semiconductor equipment companies in the world. So as I like to say, at the simplest level, we make the tools that make the chips. And that sounds simple, but it's actually incredibly complicated. It can be as many as 14 steps to process chips and make semiconductors. And and I work with some of the smartest people in the world, which I really love and really energizes me and challenges me. But we are just always looking at these new inflections, whether it's AI or autonomous vehicles or augmented reality, or it's funny, we're on this webinar right now, and I think about, would this have even been possible to this quality 10 years ago? I'm wearing these earbuds, right, with all these miniaturized devices. We have our cell phones, which like the computer I had in college probably didn't have the capability of my phone now, right? So that's what I really love about venture. And like I said, I really love the founders, and I really love with corporate venture, there's a lot of perks with corporate venture. One that at least in our case, we're pretty much an evergreen structure, right? So we're not fundraising, which is great. We have a very patient and dedicated single LP, but also I work with the sharpest people that really help me diligence deals and find the best technology, and also help us. We are able to really, really help our portfolio companies. We're very strategic, and that's very rewarding, whether it's we're helping them with, market positioning or customer access, or just developing the technology. That's really rewarding. So yeah, so that's kind of what I'm doing these days with Applied Ventures. It's like I said, very fun and just really cool bleeding edge technology that we're exposed to. As far as how I can, help people in the community, I, just like I'm energized by founders and my colleagues, I'm also very energized by just people in the broader community, even if you're not exclusively in deep tech, and I look at things like Applied Ventures looks at, in my past roles, I was more of a generalist VC. I still very much like advising and coaching entrepreneurs or, VCs that you're, aspirational VCs. And, the community is so important. Again, we talk about technology and all these changes, all these innovations, but still at the end of the day, I think social capital is really important. I think relationships are still probably one of your biggest differentiators and one of your biggest moats, right? We think about moats for technology and IP, but you're your own like IP really, essentially. So I really value relationships. I try and be helpful when I can be. So happy to have people reach out, whether it's they want feedback on a pitch deck, even if it's for something like a fintech deal. I'm also happy to tap my network, and if I think there's a VC that you might be a better fit for, I try and do that as possible because we are pretty strategic. We look at certain types of deep tech, but that doesn't mean I'm not a fan of other types of startups. So if I can be helpful indirectly, I'd love to do that. And it's always helpful. I'm a big believer of warm intros. So if someone recommends that I connect with someone, usually that ends up being a really awesome conversation, and I've really developed some great relationships that way. So I'm happy to kind of pay it forward as well. So I think, let's see, I know I got a little bit of a cheat sheet with questions ahead of time.
Yes.
As far, sorry, do you want to, anything you want to jump in on, or is anything I haven't covered yet?
First, I'm really, I learned something new, which I didn't know you had created your own fund during the business school. And,
yeah, it was like a micro fund, I should say. But yeah, it was very cool. We were meeting with, so I went to business school at Dartmouth, the Tuck School of Business, and it's in the area is called the Upper Valley. It's on the border of New Hampshire and Vermont. And so we started this fund, and the mandate was to basically invest in startups affiliated with kind of the local community. So affiliated with Dartmouth or located in the Upper Valley, very much this idea of kind of injecting capital into the community locally. And there's actually a ton of great startups around there, I think, partially because of Dartmouth, and partially it's just a really beautiful place. But anyway, I was always trying to rebrand the Upper Valley as the new Silicon Valley. It didn't quite catch on, but there are some really great companies, especially in there's a lot of really good life science companies, and there's a lot of strong programs and graduate programs that come out that students come from Dartmouth, and there's a lot of people that graduate and want to stay there. So luckily they're able to retain a lot of talent in the area. But yeah, so it was a great experience. I was lucky for the opportunity to start that fund.
very nice. And so for Silicon Valley, if you can't compete with them, join them.
Yeah.
Okay. I like what you said about we're being paid to be curious. I mean, the way I phrase it is we are paid to learn. We are learning about so many things so quickly, and we're meeting exceptional people. And these people, this is their life's work. So they are really, really good at what they do. And we're being paid to help them to realize their dream and to shape the future. So it is really, really cool. I want to know more about your approach to helping startups. You kind of hinted already a few things like access to customers and so on. Mm-hmm. But what's your personal approach? What do you do, not just applied materials behind applied ventures, but what do you do to help entrepreneurs?
Yeah, so I think the biggest thing for at least, for existing portfolio companies, typically we take board observer seat or board director seat. So we're very involved with the company. I think, one of the things I really enjoy is the coaching. You talk about how these founders are experts, and they absolutely are, but they do sometimes have blind spots like we all do. And as a VC, you get, I know this is a very cliche term in VC, but like pattern recognition, it's true. You start to see things, and you try and help your founders see around corners, and help them with talent and recruiting, and whether it's with the pipeline or for interviewing, helping them think through their financing strategy, helping them during COVID. Does the PPP loan make sense? It doesn't, it didn't make sense for every company, right? So make sure we're doing our homework. So I think that's, a big part of how I help our portfolio companies. Also, we're an advocate for them if they have some kind of agreement, whether it's a JDA or commercial agreement or something like that with Applied Materials, the parent company, and hopefully those relationships are going well, but sometimes things are lost in communication, or, milestones, timelines, might kind of need to be adjusted or whatever. So, I really try and advocate for the company, the portfolio company with us as well, and just making sure the relationship is healthy. And then, for founders, that I also try and be, helpful to founders that, as I mentioned before, that maybe aren't really in our strike zone, but are still great companies, and I want to see them be successful. So, a lot of that, I try and provide feedback on kind of their narrative and their pitch and their deck and their materials and also their strategy, and then introduce them to people like TDK Ventures or other funds that I think might also be interested. So I really I try and be, I don't like to, I'm very much a believer of the double opt-in. I don't want to abuse people's inboxes, but I do believe in a big community and a big tent, and being inclusive and helping make those connections as appropriate. So yeah, those are probably kind of the top ways that I like to help startups. It's different every month. It's like either they're trying to land a customer and maybe we're doing a customer call, or they're doing finance and I'm doing a call with an interested investor, or they're hiring, or something else, right? So there's always something to help with. And yeah, and that's what's, you don't always have to, this often happens, right, that you're maybe waiting until, not waiting, but something doesn't come up until the next board meeting. But I try and be in touch more regularly than just like once every 2 months or once a quarter or whatever it is. So trying to be really accessible, and be in its simplest form, just being responsive. I try and really prioritize my portfolio companies and make sure I'm getting back to them and being clear, and also to other startups as well. I think communications really important, and I think it's easy. VCs tend to they never like to say no. So I think and I don't really like to say no to anyone, really, personally or professionally. So I think just being clear about objectives and alignment, and if trying to communicate quickly, whether I see a fit or not, I think is kind of one of the bigger services I can do to startups that we're just kind of initially talking to as well. So so people are being efficient with their time.
I think you're right about saying no is very hard. And so right now at TDK Ventures, we've had more than 900 startups coming to us. We've invested in 9, so we're at about 1%. And the way I like to simplify it is, out of 100 you see, for about 90 of them, it's okay to say no. It's not too tough. There is always a very good reasons to explain why. And then the next 5 is tougher. And then the next 4 is really hard. You really love them. You really want to go beyond. And then you still have to say no.
Yeah.
How do you see that?
Yeah, no, it's really, really hard. And I think what I try and remind myself is, that's just part of due diligence. Due diligence is, okay, this company seems interesting, seems exciting. Now let's do the homework. And that's a lot of work for the investor, and it's also a lot of work for the company, but it's not a rubber stamp. It's not a check the box. It's due diligence, right? It is, okay, we're digging deeper. We're answering a lot more questions. Sometimes those will guide us in a different direction for whatever reason. And so, that's just part of the process. And I truly believe with us, being strategic investors, I want to really be able to add value to our portfolio companies. And, sometimes that's what surfaces out of due diligence is great company, but, not a great fit with us. And I don't see us, adding a lot of value. So it doesn't make sense on either side. So it is hard. And I think, again, in those situations, I'm always trying to still, though, help them in other ways. And I hope, to stay in touch really with everyone. And I hope it wasn't a totally painful process, even if it doesn't, end up positively. So, but yeah, I think, but that's, due diligence, again, it's just, you got to put in the work, and sometimes you'll get a yes and sometimes you'll get a no, but that's the point of the process.
So let me double click on the saying no, because that's, I think, where there are a lot of practices, and maybe some will argue is best practices or not. When we pass, we try to give what we liked and what we didn't like. So at least we can give some positive, but hopefully we give some feedback about what the entrepreneur may not realize, the blind spots you mentioned before. And that's still helpful for them, even if we decided not to invest. How do you, and I'm not saying we are perfect all the time, but that's where we strive towards. How do you do the pass email, the one where you're saying?
Yeah. Oftentimes I think I like to also verbally communicate as well, and try and give some of that feedback. I think oftentimes, just given the lack of activity with engagement with us, sometimes it's not totally unexpected when we've decided that it's a pass, at least kind of the given situation. But I really like that idea of giving positives and also some feedback, and I think that's really valuable to the startup. And I think the expression feedback is a gift. I think my boyfriend probably doesn't feel that way, but I think I actually do. I do agree with it. And so I like that approach. I might actually try and do that more. I'm usually kind of simple about it, and maybe it's just because I kind of want to like rip the Band-Aid off a little bit, but I think usually, again, because the way that we're strategic, but again, going back to founders, and I'm just such a founder fan, I never want to discourage anyone. And I think, you're doing something so brave that most people aren't doing. So, it's not a fit for us, and I'm sorry. And I don't, I don't certainly, again, want you to be efficient. You should be running a company. Fundraising as an investor, right? I always frustrate like how much time my like really talented CEOs and leadership team are spending on fundraising. I'm like, this is not always the most efficient process. So I'm mindful of people trying to run a company. But yeah, so I hope that people don't really take it as a ding or anything. Just doesn't make sense for us. But I still think, these people are heroes, and they should be, supported and encouraged, and, if not with capital, but in other means and other ways.
Very nice. I really like the way you phrase it. I'll talk about something very small you said, but actually that may be important for those entering corporate venturing or even VCs. You talked about double opt-in, and it nearly feels like in my previous roles in sales or in business development or product marketing, it's fine to actually introduce someone to someone else. But in the VC world, it feels like if you don't do a double opt-in, it's like a faux pas. Can you?
That's funny. Yeah, I'm really about, while I'm very much about inclusion and a big community and building relationships, I'm also very much about efficiency. And I find it a little bit frustrating sometimes when I don't get a double opt-in and I'm not really able, for me, it's not very actionable. The company, I don't really know how to help them, or the person, or whatever it is. I'd rather have the opportunity to kind of, again, opt in and say, oh yeah, this is definitely, something I'm open to. And I've, as a VC, or even just as someone trying to network, I've cold emailed endless people, right? I mean, I've definitely done it, and people are incredibly receptive. I've connected with some incredible people in the VC world and the entrepreneur world, and I'm so appreciative of that. So I wouldn't say, it's like against the rules, but I find warm intros are just more effective, and people will kind of prioritize that. If like, oh, okay, Jackie's recommending this person, and let me take a look. Oh yeah, thanks for thinking of us. Like, this looks great. I think, there's some people that I will just go ahead and make the intro. but yeah, I mean, I don't know. I think there's definitely like different philosophies about it. I think though, but it's so easy for people to forget. So sometimes I'll ping the person and say, just double checking, like, do you want to, connect? So, I don't know if it's like totally a faux pas. I have plenty of stuff that people send to me that I'm stoked to receive and really happy to connect. And if it saves everyone a few steps in emails to just go directly, like, it's okay. But
very nice. And so of course, introduction is always very nice to have. But have you ever invested in a company that came to you as a cold email?
Definitely in my prior role, I think, yeah, I'm trying to think, one of the things I love about being a corporate VC is that a lot of the companies are recommended from employees, with applied materials, or somehow we're already connected to the company. So yeah, I mean, we do get a lot of inbound companies, and I'm sure we have. I can't think of an exact example for me currently at Applied Ventures, but definitely when I was more of a generalist VC, for sure. And and like as a founder, or if you're the head of BD or whoever is the one that's kind of pinging the VCs, like, that how they're doing that is also how they're approaching customers, right? So like you got to be out there and you got to be doing it. So and you shouldn't be bashful. So yeah, I'm not sure, but I definitely, I mean, I wouldn't, I don't think I categorize. I'm gonna have to really think about this. I think yeah, there's always been some connection already, and I think with where I personally invest right now, I'm really into AR and optics. I'm really into autonomous vehicles and auto sensors and LiDAR, radar, etc. And then some semiconductor equipment stuff. So I feel like those communities, especially on the AR side, are actually pretty small. So I pretty much already know everyone. And I'm kind of more just tracking them for, okay, like, when's the next, financing opportunity? But no, I'm definitely open to it. I mean, that's why we have, on our website, like, email us here, would love to hear from you. If we do this exercise every year where we look at, all the deals that have happened and that are of interest to us, or, potentially of interest, and trying to map, what we missed. And, we're always trying to close that gap, and you have to, this is a terrible expression for this, but it feels appropriate. Maybe because I'm talking to a Frenchman, but you have to kiss a lot of frogs, right? You got to talk to everyone. And it also gives you, that's how you're landscaping, right? So indirect answer to your question. I can't think of one currently at Applied Ventures that I've done, but definitely open to it. And now I almost feel like I need to challenge myself to do that.
I think it's good to challenge ourselves, actually, because if we want to be more inclusive, we have to expect that some people won't get a chance for a warm introduction through the network. So actually, we're just answering one of the first Q&A questions that we had, which was from Subramanian, which was percentage of companies we invested through cold calls, which I think for now is...
Yeah, cold calls / emails.
I think there is one between a warm introduction and a cold email, and I think it happens to Applied Ventures, is meeting in conferences, whether the startup was presenting or Applied Venture was presenting. I know that sometimes that's how the startup and the corporate VC meet, and that's not a cold email, and this is actually a warm discussion. It starts with a context, and I find that if I was to give an advice to startups and corporate VCs, is make sure you go to conferences where it's actually appropriate for your investment thesis.
Yeah, no, absolutely. Yeah, and also, as from the CVC world, like, it's kind of like a big family in some ways. I mean, we bump into each other a lot. We obviously, a lot of the big other electronics and semiconductor focused VCs, you know, on the strategic side, we know. So I you know, having these investors that, you know, if they're already in a company, that's definitely, or they're really looking hard at a company, that's definitely a great indicator for us. And also from experience of you know, being in the boardroom with, you know, some of these other strategics, you know, we know kind of who a solid investor syndicate is, and, you know, who's a great team for the, you know, that can really add, I feel like I say add value a lot in this call. I gotta, it's very much the VC soundbite, but yeah, so I think the warm intros is huge, partially because, you know, again, I'm really big on relationships, and I think it's easier to ignore someone you don't know, right, than someone that's really like taken, you know, the time to think of you and reach out to you. So I think, you know, warm intros for me go a really long way, because I think usually the whoever is, you know, making the referral knows us really well and knows me really well, and so they've kind of saved me a little bit of time, right? So yeah, but I definitely think, yeah, it's an interesting question as we go through this exercise of, you know, as we look at deal coverage, as we call it. I would be curious to look at like how many deals were just kind of inbound, you know, we weren't really connected to, like we didn't go after, you know, we were pretty passive about. I'm curious about the percentage of deals. I think we'll have to look into that.
There are some surprises. It's like we've just done about 10 deals, and we just looked back. And my expectation was maybe 1 or 2 out of 10 would come from inside TDK employees recommending a startup. We're at half of them, which shocked me. So this was really, really surprising. So I think it's really a good practice to go back through all the deals that happened and to understand where this came from. And it's funny because one of them that we've closed and we announced later this month, we really had to check emails to know who came first, because they visited us at the CES booth. So it was a TDK employee that told us about them, but there was someone else that actually also mentioned it to us, and we had to look at who was the first to tell us so that we could put it in the right place.
Who gets brownie points? Yeah, that's great. No, I really like, I don't know if you've kind of established this. I mean, I know you were at TDK already, so you probably already had your network internally, but, you know, one of the things I have, obviously my external network within, you know, venture and the startup community, but also internally, I kind of have my champions that I kind of go to, or they come to me. And that's a really fun relationship. I probably have maybe 5-10 people, you know, top of my head I can think of that I have a really good rapport. We go, you know, we'll kind of like look at one segment together and be like, all right, here are the 10 startups, you're engaged with these ones, I've talked to these ones, you know, where's there an overlap? Like, who are we most bullish on? Because it's not just, again, for strategics, it's not just the capital resource, right? It's also the time resource of the business unit. So, you know, we have to think about the you know, the return on both, and really, you know, be intentional about, you know, the startups we're working with. So yeah, I love you know, definitely the inbound deal sourcing, or deal vetting is really, really great. And that's, yeah, again, advantage of corporate venture is, you know, I have this bench of, you know, 10 experts on any, you know, particular subject matter that help me very quickly kind of, you know, dice something up into, you know, does this really make sense? Like, can you really, you know, will this be, you know, can this be commercialized? So I definitely love having that secret weapon of that talent.
I think it's one of the biggest value of a corporate VC is to leverage what is called the mothership. So in my case, I was
yeah.
in TDK, so they had bought my company. So I was 1 year in the company when I proposed to do the corporate VC. So I didn't have this network. So what we did is we created a function, which I think any corporate VC should really have, which is called startup liaison. And that person is every morning in thinking about how does a TDK corporation can bring value to our portfolio company, and at the same time, bringing some of that knowledge and synergies back to the mothership.
Yeah,
So,
no, absolutely.
I want to double click on one thing you said and then move on to your investment thesis, which is some of the questions I see. The double click is on the board of directors or observers. And I know that you do both. And I want to have a feel of whether it's whatever you can get, or there is sometimes a conscious choice to have observer versus a director.
Yeah, so I think that we are, a lot of times, an observer seat, effectually, right, an observer seat is you're a director in everything in that you don't vote, right? And so, and in my experience, there haven't been that many times that there's been kind of a really serious vote. But I'm sure as my career goes on, they will, there will be plenty of important voting situations. But I think that what I've always called us is we're very active observers, and we like to be extremely involved. And oftentimes, if there is some type of partnership with Applied that's more formal, some kind of active engagement, the board is really looking at us to understand what's going on with that engagement, and also kind of get our feedback. So typically, whether we're the director or the observer, people see us as adding a lot of value, which is gosh, there I said it again. All right. But yeah, as far as the decision, we would definitely not take what you can get. I would say we're very intentional about, does this make the most sense for the startup and for Applied to have a board seat, thinking about board composition, thinking about how we can balance out the board, but an observer seat is very important to us at a minimum, because again, we want to be very involved with the company. And I think of board meetings very much as that information can flow in, but not out, right? So because it's of course confidential. So that's really my opportunity, not just to say, okay, here's the quarterly update of how you're doing. Okay, great, customer this, but it's really my opportunity to myself be prepared and have an update on our latest thinkings, how things are going with the project, if there is gaps, if there are delays, whatever. And then also, give our perspective based on what we're seeing in the industry, because oftentimes the startups that we back may be operating in very similar markets as we do, so we can provide a lot of intel as well. So yeah, it's definitely not a trivial thing, the board seat, and we take it very seriously and make sure we have the right experience, and also have the right, training. There's some really excellent corporate governance courses out there. But yeah, no, it's certainly not non-trivial, and it's a lot of work. So I think the observer seat can be really, really great and make sense in a lot of situations, especially when you already have a really good relationship with the startup. I have some startups that always reach out to me for advice and feedback, regardless of whether I'm officially, a director or whatnot. And it's just, there's that trust there.
That's actually, for me, the right sign, is when you have enough engagement and intimacy with the founders that it actually doesn't matter you're on the board or not. You're going to be able to engage, help them, they're going to ask the right questions. So I want to move now to the test that I normally ask CVCs. In 1 minute, can you describe your investment thesis?
Yeah, so we invest, I'd say we invest very much in inflections, in big, technology inflections that are enabling a whole new wave of applications. So we're at a really interesting time, I think, right now with AI, quantum, autonomous vehicles, life sciences, augmented reality, and that's our thesis. Like, we're betting on the next big thing, the next big technology that's going to really change people's lives.
Beautiful. And that leads me to the next question from Patrick, which is, which stage do you invest? And I'm guessing if it's about investment, it's not so much about the stage of the company, but tell us about what stage do you like the most and what stage would you say no to, for example?
Yeah. Oh man. Yeah. So we are, good guess, because we're very strategic. It's more heavily weighted on fit. Though that said, sweet spot is probably kind of Series A. Where I like to invest. So, we've done kind of the university spin out thing, and that is so, or just kind of early stage, seed investments. And that can be so rewarding to kind of watch them, grow up as a company, so to speak, and really find their, find their place, and as they kind of really, whether it's they land a huge customer or they just, they're at CES and a demo and they just knock it out of the park. That's so rewarding, and watching the team kind of grow and develop and develop that cohesion. I think, I'm obviously like romanticizing it a little bit. Those are kind of the best case scenarios. So that's what's fun about early stage investing. Also, it's also like, it's just fun, right? It's, it's like kind of the wild, wild west, like who knows where this is going to go, but the economics, right now it's, really attractive valuation. But there's also something about, later stage investing with just such a rock star team that just has such, and a rock star, investor syndicate and board. And it's just like, they are so dialed, and it is just such a high level of professionalism. And that's where I really learn a lot as well. So yeah, it really, I think I probably prefer earlier, just because that's usually where we can add, I'm going to do it again. I gotta come up with a different phrase. But, I really like, say it.
You were going to say add value? Yes.
So, that's where we can really help. That's where usually, they're doing tape outs or, early demos, and there's a lot of technical challenges, just like little things that we, again, I've got the very deep bench of, experts that can help solve. And so I think, probably I trend a little bit earlier stage, just because I think it's just more exciting, and it's really fun to see the company evolve.
I think that's a really good way to say it. So at TDK Ventures, what we say, it's early projects. And so we've invested in seed, A, and even B. And that was all fairly early stage. But we also invested in SLD Laser, which was a E, and we just invested today in Gencell, which is a F. But inside these two companies that are very late stage, they have early projects where TDK can add value and can influence the outcome and can de-risk the outcome. And because of that, we decided to invest, because we feel like it's early project enough with high level of risk, but high potential, so therefore high reward, that we invested. And so it's not early stage, but early projects. And I feel like this is kind of similar to how you think.
Yeah, no, absolutely. And it is funny though. I mean, I was on a call, I think it was yesterday, with a company that had been around for over 10 years. They were doing their Series A officially, but they'd never really raised from a traditional financial VC. It was like mostly kind of high net worth individuals, kind of, I'd say kind of super angels, if you will. But they're at a Series E, but they'd only, I forget how much they'd raised, but, and still an attractive valuation. So sometimes like Series E can mean different things, especially I think in the hardware world, where, sometimes you see these companies that have been around for over a decade, and they've just, they're able to get all the grant funding and NREs, and are able to just really be like efficient and keep going and kind of raise, these bite-sized rounds instead of, as opposed to like these massive, traditional like growth tech rounds, right? Where it's just like, eyeballs, like, acquire customers, like run as hard as you can. So yeah, so my point is this Series E and Series F can sometimes be a little different in hardware. But
I'm going to pick a question from Ehan, and I'm very interested to know how you're going to answer it. How do you think the right balance should be struck between the strategic fit and financial ROI as a CVC?
Yeah, so really good question. So I would say that strategic fit is kind of like the hurdle, and then financial, I'm trying to think what kind of precedes the other. Financial return, I mean, we model very much for financial returns. Like, we want to back winners. We've had several companies IPO, myriad exits, and several companies IPO just in the last, I think, 18 months. We've had, I think, 4 IPOs. So, we want to back winners because, their success is our success, and not just in terms of financial. So I actually think of them, as I said, we are highly strategic, but it is absolutely, mandatory that I have to believe that, we are going to make money off of the company. So, of course, we're not going to have, like a growth stage VC, right? Like, it's very, very kind of clear. Like, they have to have this type of revenue. We need to get this type of multiple, like this IRR. We're a little more flexible than that. But both are very much requirements to doing the deal. It's not, if we're helping a company kind of limp along, we're not really doing them a great service either.
No, I like your answer, and now I can disclose, but I really don't like this type of questions that anchor a false choice. To me, startups that would be great for financial reasons, and some which are great for strategic reasons, and what you need to do is to find this overlap.
Right. Yeah, and so, absolutely.
The spectrum from strategic to financial is just the wrong question, or the wrong anchor in the question. I wanted to ask also about, you've been going for a decade, Applied Ventures. You've got 3 funds. The first one was 50 million. The second one was 100, or it's either it was structured, and the third one was 150. Can you tell me about how this progression happened, and how do you think it moves forward?
Yeah. So, leadership at Applied is really, really supportive of Applied Ventures. And, obviously that's a testament to how the teams run and how we've been operated and been operating and our discipline, I think. We recently acquired one of my portfolio companies, and, that's a big all around win, right? And that's, I think of corporate venture as a tool for the parent company or the mothership, as you say, and that is potentially one tool or use of the tool is acquiring portfolio companies. But management, we had a call. We had feedback very early on into the pandemic that we should very much continue to invest. This is in some ways a boon for the technology areas that we're interested in, communication, electronics, connectivity, all that stuff, right? Is very much, where Applied as a company invests, and also Applied Ventures. So we're definitely bullish, and I'm definitely really, really glad that we have that support and that vision from that leadership that thinks we've done a great job and wants us to continue to do a great job, and is really supportive on how we think about investing in these kind of interesting times. So as far as future funding, I wouldn't be surprised if we kind of get even more, start deploying even more capital. I do think we found a sweet spot of, the appropriate amount of capital for the amount of deals that really make sense for us to do. But, maybe, we'll start, doing even bigger checks or leading bigger rounds, who knows, but I wouldn't be totally surprised, just given, again, our track record and our support internally. And, again, it's just, I think there's just I don't know, people in Silicon Valley or people in tech, probably in kind of deep tech and hardware, probably always think this, but I think we're just at a really cool time with so many just mind-boggling technologies that are emerging that, again, I look a lot at things like augmented reality. And, I think in 5 years, things are going to look very different, how we, the devices that we, use in our daily life, right? Maybe it's smart glasses, maybe it's, fully immersive. I have an Oculus at home. It's like one of my favorite things. When I'm taking breaks in between calls, I'll do a quick Beat Saber game. And it's like, I never played video games, but I'm like, really love that just full immersion. So anyway, and like 5G and autonomous vehicles and, looking now at like communications in space. I've looked at a few cool, interesting deals right now. So, it's just a cool time. There's just a lot of great stuff happening. Applied Materials has some really great programs for, technology that we're, more or less incubating or finding partners. We have the Meta Center in the state of New York, where we're, helping startups that are moving to high volume manufacturing, like bridge that gap with prototyping. So yeah, I'm personally bullish on what we're doing and how we're working with startups. So I think the company as a whole is. So I hope Applied Ventures continues to do bigger and better things. But of course, partnering with great CVCs like you guys.
I definitively hope so, and that we get to co-invest way beyond the first two.
Yeah.
Yes, with 4 IPOs in the last 2 years, it's not like you're not showing success. You're really showing success beyond normal exits, but also IPOs. We need to close soon, but I have two more questions. The first one is, you're one of the few CVCs that are doing direct investments as well as funding funds. Can you tell me when you think it makes sense for a CVC, for the audience, to do a fund versus only doing direct?
Oh man, that's really interesting. The fund to fund is really great as like an extension of yourself, right? Like we have global, Applied Materials has locations globally, big facilities across the world. But the ventures team is in normal times, we're all in Santa Clara. And, I like to say I'm in my, my desk was within 10 feet of the CTO and 20 feet of the CEO and the CFO. So I think for us, we found that there's really a value of just really being kind of close with Applied leadership. That said, it's harder to source deals internationally. We have, again, that's where the employees that you have a good relationship with on the business unit side can really help. But so I think if you're trying to extend your exposure to whether it's an investment area or space that you're not really tapped into, or geography, I think it makes a lot of sense. But I don't know. I think, you got to roll up your sleeves and get your hands dirty. And that's really how, even if you have to start small and kind of like a baby fund, I think direct investing is, depending on what the goals are of the CVC, I think it really makes a lot more sense. You have to talk to, as you said, hundreds and hundreds, thousands of startups to really find the right deal that's kind of in your strike zone. But I think it's worth it, and I think that's really the bigger benefit to the startup. So I think I don't know, I'm more in the like go big or go home. So I say, it makes more sense to direct invest, but it depends on what your goals are. If it's more invest to learn, and you just maybe will opportunistically co-invest. Sorry, that's my parents' poodle. Sorry, the little tail in the background. But
putting pressure on me. They say time check. So
okay. Sorry. Yeah.
Move to my last question, which is really quick, so they will not be too worried. What's the best way to reach out to you? The
best way to reach out to me? Warm intro. But I think my email, I think, should be on our website, but Jaclyn_Kossmann@amat.com, or we have like an info@Applied Ventures that I think you can access through the website. So would love to talk to more startups, or, happy to talk to anyone that generally wants to connect. And well, great. Yeah, we should wrap up. I think we're a little over. This has been a ton of fun.
Thank you, Jaclyn. It was a really good conversation, a lot of good insights you shared. Thank you so much.
Awesome. Thank you. Thank you, Nicolas, and thank you, 500 Startups.
Bye.
Bye.